Morning all, how are we doing? Mic working? Yeah, good. Hello, how are we doing? Sorry I'm late again. Always late. Morning Stevie, morning Virginia, morning Bellino, David, Jules, evening. Morning Joy, morning Diamond. Sorry, I'm all hot and sweaty, got back from the gym. Thursdays. Always late on a Thursday. Morning Guido, who shot first. Right. Morning Steve. Last night was FOMC, so let's have a quick look at the US dollar pairs and what happened last night. So, as you can see, wasn't a huge movement off of FOMC. US dollar Swiss is probably the best thing to look at. So, really, if we look at what happened with the rate last night, we got the 5.25, which was what we were expecting. I'm going to read through the press conference notes in a minute, but nothing particularly dramatic in there. So the market really hasn't had much of a reaction. We had a lot of whipsawing, as we usually do. So Euro US dollar, where's my pen gone? I haven't got my pen yet. One sec. So Euro US dollar basically spiked up to there, spiked down to there, the usual liquidity run of each end, and then just basically gone nowhere. So no real movement. We've had a little bit of weakness on the US dollar this morning, not a great deal. So the market really hasn't done anything with yesterday's news. Morning, Khalid. So if we go back and have a look at the notes, where are we? There we are. There we are. So Fed drops language that anticipates more policy firming may be appropriate to attain sufficient restrictive stance. Don't know what that means. Read into that, possibly more rate increases. Don't know. Anticipates more policy firming may be appropriate to attain. That's the same thing. Vote in favour of policy was unanimous. So we had talk previously about some of the members basically saying that they wanted to freeze in rates. That doesn't seem to be the case now. It's unanimous to increase them. So stance seems to have shifted a little bit towards more rate increase than less. Continue reducing balance sheet as planned, blah, blah, blah. US interest rate futures places pause in June and July meeting. So this is the kind of the main thing that came out, that we are probably terminal rate 5.25, but that is what we were expecting anyway. So that isn't news, which isn't surprising that the market didn't react to it, because it looks like we've probably hit the terminal rate now, unless anything goes drastically wrong with the CPI figures this month. Rate futures show traders pricing rate cuts in September. So we're looking at autumn for a drop in rates potentially, although the Fed did say they can't see themselves dropping rates this year. So that is contradictory to that. But the speed, if you look at the interest rates and what's happening with them, how long we got until the market opens? 5 minutes. The interest rate's coming down at the inflation rate is coming down at 1%, target being 2%. So that's coming down very, very, very fast, meaning that it's unlikely that they will be able to sustain that 5.25 for too long, because if they keep that there, that is going to come down way too quick. And if they get that below 2, that's going to be unfavorable. So it may be that we now do start to see rate cuts coming in this year rather than next year, which is what they were planned, because inflation is coming down faster than expected. This soft landing is coming quicker than we thought. So potentially bearish moves ahead. Few other bits. Prepared to do more if warranted. Yeah. June high cards still low 1 and 3. Decision on pause was not made today. We know that. Staff predicted the mild recession in general. However, my forecast is a modest growth, not a recession. So rate cuts would be inappropriate given the belief that inflation will take some time to subside. It's coming down at 1% a quarter. It's not, is it? We feel like we are close, or maybe even there. So yeah, so basically that's what they were anticipating. What's that? According to people who Beverly Hills-based bank has been working with a financial advisor. Another bank, PacWest Bank Corp, in trouble. Another bank going, this is 2008 all over again. JP Morgan, I see a Fed cut coming as early as September. Yeah, well, you got the oil wrong, didn't you? Anyway, so yeah, there you go. So potentially weakness coming through, possibly, on the US dollar. So we'll have to wait and see what the market makes of it today. Morning, John. Morning, Danny. Why, if you increase the rate, inflation drops? Go and read up on that. Go and ask ChatGPT. My session's expired. Ugh. Why does inflation drop with interest rate rises? There is an inverse relationship between inflation and interest rates, which means an interest rate rise, inflation tends to drop. The reason for this relationship is that higher interest rates make borrowing more expensive, which can discourage consumers and businesses from borrowing and spending money. As a result, the demand for goods and services decreases, which leads to a drop in prices and inflation. There you go. ChatGPT is your friend. Go and ask him everything. He knows everything. Morning, Dreska. If you want to learn economics, that's your man. Right. So we seem to have a little bit of strength coming through this morning on the US. Everything's starting to roll over. I'm just keen to have a look at this pound CAD to see if this is dropping. It is. Okay. Let me just get levels on this. 1 second. I did an aggressive drawdown control position on this pound CAD yesterday, which didn't work out. And I'm just looking for a level. So where we're turning is this area here. Yeah, so we pushed basically up into here, push down, push down, push down, slammed through. So this area here is potentially a bounce point, not a very good one. The pound CAD is the only position at the moment that is in drawdown on the H1M5. It's the one that I had the option to get out of with $800 worth of profit, remember? And I didn't. So I took an aggressive drawdown control position on this one yesterday here, which got stopped out. So it was quite a small risk, but didn't play out. So the average is 150 ADR. So I'm keen to try and get this closed, and we've got some really nice propulsion gap targets to the downside, but the average is a little bit too far away. So I think I'm going to try another one this morning on this. We've just had the reversal and retest. Well, it's not quite retested, but second leg possibly starting on that. So I'm going to have a crack at that again on the pound CAD. So risk on that is going to be 1.1%. So that's why I took that loss, or rather the account took that loss yesterday of that 1%, because 0.8 of that was aggressive drawdown control, which was attempted yesterday. So going to see if we can get one more in on this there. So you can see the average is now up here, was down here. That's the target. Already banked loads on this. So it's made profit. I should have got out of the whole thing, which I didn't. English sarcasm. It's not sarcasm. I'm just letting people know. Not everybody knows about ChatGPT, but if you want the answer to any question in the universe, it knows. So if you want to know why there is a inflation drops when interest rate goes up, rather than me explaining it, go to the expert. Morning, Neo. Right. Opening range breakout on the DAX. Sorry, a little bit late. We have just taken the 15-minute pre to the downside. Which is good. I've got a short actually running at the moment. I said I wasn't going to trade indices, but I am. I'm shorting the NASDAQ at the moment. the reason I'm shorting the NASDAQ is I was anticipating a drop off the back of yesterday's FOMC back down into the range. So where we were yesterday at FOMC, we were up at the highs here. I was anticipating a run down to the lows, so I put a short on. No target, but looking to get out somewhere around here. Basically 125 ADR roughly today. So I've got that running. So I'd love the DAX to collapse today. Yeah, exactly 125 ADR is my exit. So that'd be very nice if the DAX could collapse, because that'd be a nice big profit. What you see with pound yen? Nothing much at the moment. We're just coming down into propulsion. So this yen basically is undoing these moves back down into here. So this is where we were looking for a target, pound yen. Once we get down to there, there's potential for a bounce back up. But right now it's not extended. It was extended. This was an H4 extension, which I got into and got out of. So down to there, basically target. When will the New Zealand dollar CAD drop, Henry? It's just extended now, so good opportunity to get in now. Stuck sideways at the minute, flagging. A nice breakout on the 15, holding at the minute. That propulsion gap's just filled. So yeah, very extended on the 4 hour. Not really got any pullback off of the hourly, so just kind of flagged and then dropped a little bit. Just got one position on that at the moment from Tuesday. Just sitting in at the minute. Good targets to the downside. Waiting, patience. Just give it time. Right. Banked 0.5% now. Something's just got banked. Let's have a look at what happened yesterday, actually, with banking everything. While we're waiting for the DAX to do something. A little bit lackluster today, isn't it? So let's quickly look at today's news as well. Where's my VPS gone? Right, news today. So it is Thursday. Main news today is the euro refinancing rate. So again, this morning, potentially we are going to see a fair bit of sideways action today. With what happened with FOMC, I think the market had factored in the rate, which we know. The market was pretty much sure we were getting 5.25. That was what was forecast. That's what's been talked about for ages. We got that. The market was also anticipating this potentially being peak interest rate, and the Fed have come out and said to a certain extent that is probably going to be the case. So I think I don't think we're going to see any violent moves off the US dollar this morning, because I think the market has got exactly what it was expecting and it's all factored in. Now it's a case of where are we going from here, and the Fed didn't really give any clues. So I think we'll probably see a fairly quiet morning ahead of interest rate rises for the euro. So the euro is forecast at 3.75. We've got a potential for a 4, which was hinted at. So we'll see what happens with that one. But there is potential for a very big, strong move to the upside today on the euro if we get that. If we don't get that, we'll see what the market makes of it. But there is talk of potentially getting close to terminal rate as well for the euro. So the press conference is where we're going to find that information out. So this is the important part. Whenever you get a interest rate announcement, the press conference is what gives the forward guidance on the next quarter. That is what we're looking at. That's what COP positioning is all about. Where are we going in the next 8 to 12 weeks? And that's what we're going to find out at 1:45 in the press conference. So we've got that this afternoon. We've got unemployment claims at 1:30 as well. So all the market this afternoon is pre-New York open. So the New York session could be quite a big one, because we'll have had all that news come out and then they've got free reign to do what the hell they like. We've got Macklem speaking a little bit later on today as well. So there is potential for some movement later, but that's after London's closed. So bank holiday again in Japan and tomorrow. And then tomorrow we got the Swiss CPI, which will be quite an important one. And then we got unemployment and obviously non-farm payroll and the unemployment rate for the US, which is the key bit. So busy day today, 115 euro. So what's your euro exposure? If you've got a load of euro exposure on and you've got it ready to bank it ahead of it just in case it does go against you. If it goes against you, you can't get it back. If it goes your way, oh well, never mind. At least you've still banked some money. So just be aware of that, okay, today. Yesterday, so the ADR reversal set file yesterday basically banked 0.68. A little bit of drawdown control done so far this morning. Nothing in any drawdown at all. US dollar Swiss is in 0.96. That's a long. So that's it. So all fine on ADR reversals. Banked 2% so far for the month. H1M5 banked -1 yesterday. 0.8 of that was me, not the EA. Doing stupid drawdown control, which I'm again attempting stupid drawdown control this morning. But yeah, banked 8% this month, sitting in 3% DD. H4M5 banked 3.86, 0.65 yesterday. A little bit of drawdown control this morning. We've got a couple that look like they're going to bank, mainly Swiss franc. If we get a nice strong Swiss franc today, which would be nice, which we might do if there's a banking problem. Yeah. So this news we just had yesterday, or was that this morning? Yesterday, on this another bank, Swiss franc is going to benefit if we get more banking problems. So that will hopefully help today. So 1% drawdown. There's nothing in drawdown basically apart from that pound CAD again. Just pound CAD, just can't get it out. So yeah, bank 3.86 is doing well. H1 mean reversion, H1 hedging banked 6.86, sitting in 11%. This will always be, if you're running a hedging set file, you are always going to be in drawdown, always, and much more than normal, because the whole purpose of it is it's just getting in and out the market on the swings, and you're going to get squeezed a lot more on it. So you're always going to be sitting in somewhere between sort of 5 to 25% of drawdown on a hedging account. But yeah, banking very nicely. That's banked low. I think that's banked. Not sure exactly what that's banked all time, but quite a lot. 15 grand so far. So doing very well, that one. So there we go. So that's all of yesterday's trades closed out with the EA. Right. DAX, you are, if you took the opening range breakout pre-market on the DAX, outros here, morning, banked more than the American banks at the moment. I was going to say, outro, you probably took the pre-market 15 or 5, didn't you? So outro has just made a load of money. Your pre-market was that. So you've got pretty much 2R. Well, you have got a 2R, almost a 3R return on the pre-market opening range break. The 5-minute opening range break is south as well. There's your 5-minute ORB. So if you took that one with the EA, you're just coming straight down into monthly support. Let's just have a quick look at the DAX. So DAX, basically what we're looking for is the gap fill still. Here we are again. This is our 1, 2, 3, 4, 5, 6th visit. This is knocking on this door hard. At some point, this door is going to go and that is going to collapse. And as soon as that collapses, you're coming straight down to here, which is ADR, and probably further, which is back all the way down to this gap fill. So scenario today, if you want to play the euro, if the euro gets its 4% interest rate rise today, the euro is going to go through the roof and the DAX is going to go through the floor. So that's what typically happens. The DAX does the inverse of the euro on news. So if we are going to get that, and the market looks like it might be factoring that in already, we are potentially looking at a 200 to 300 ADR move, which gets that gap fill done there. Yeah. I mean, 300 ADR is obviously going to be a lot further, but that's your gap fill. So there's a good possibility of that actually unfolding this afternoon, because there is a chance, I think, that we're going to get that move on the euro, potentially, that 4%. I reckon it's a 50-50 shot. So we are tapping into this support again. So there's your weekly low, that black line. This purple line is the previous monthly high, which is what we keep tapping into over and over and over and over again. So these lines here are your main support resistance from the weekly and the monthly. That's what we keep tapping into. We've just broken it. So let's have a look and see if we get some limit orders trigger down here. So what we're looking for basically is a kind of pop, a big fast pop through that level, which is basically all the stops here on everybody that's long in the market, all being triggered, and they'll eat the whole lot up, and then we'll retrace back up into here and then slam back down again for a second leg, back down to ADR. So the limit orders, as you can see, are triggering here. So this is the market placing all of its limit orders at the support resistance levels. So the sellers find it very hard to get through. This is why support resistance works, because you will always find there's a load of limit orders sitting up there. Why? Because it's a high, a swing point. So next time we get to the swing point, people play the double top, the double bottom. At all the weekly support levels, you get the limit orders triggering there because everybody's buying the lows. Market spends 80% of the time it's in mean reversion between ranges. Therefore, that's where we put our orders. Just logic. So that's what you're seeing triggering here, limit orders triggering off, and it's either going to push them back into that propulsion where we'll have another run at it, or they'll overpower the sellers. The sellers will give up and we'll go back up again, and then we'll come back up into the range high, which is back up. That purple line and that black line. So 150 ADR to the upside. So we see how we get on down here. Push back up into there and potential drop. It's what we seem to keep consistently doing on it. We have a go at it. We push up. We don't manage to get down, and we make a W pattern reversal. We have a go at it. We push up. We try again. We don't manage to do it, and we push off. We have a go. We push back. We try again. We can't do it. It's just happening over and over and over again at this level because the market doesn't want to break this range. It just wants to stay trading here. This is a nice area of balance. This is day 12, I think, isn't it? Day 13 or something? Counted it yesterday, didn't we? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 17. It depends where you count it from. I think I was counting it from there yesterday because it's this part of the range that I was looking at rather than this little bit of balance down here. But it's kind of all the same thing. You can see we are literally just sideways. As soon as one of these breaks, we're off. They're just going to pile in short. So we'll get a big day. And obviously, if the Euro news, the rate kicks in this afternoon at 4%, we're off. So we'll see. And that will obviously bring all of these other indices down as well. So the NASDAQ will start to come down. The Dow will come down. The S&P will come down. And they're all in very similar sorts of situations at the moment. We've had a little bit more movement on them, but they are all range bound. We are sideways. We are stuck. Nothing is moving. There we go. We've broken it. So there's the pop. We got the pop out that low. So we're off now. So this is your 15-minute opening range there. So pull back and then break back down to ADR. That's good. Nice ORBs today, if anybody got on them. Steve, sorry, got the T reminder from the EA. Made a cuppa. Did I miss Euro Yen? Yeah. I'm going to build that into one of my EAs as a surprise for you. It's going to go, make a cuppa. It's going to be my voice shouting at you. The alert is going to be, make a cuppa. Euro Yen. Extended. Not very. Down in propulsion. I'd like to take it from there. However, you've got this resistance, which we're testing here. That is the main one, obviously, which is bang in the middle of that propulsion gap. It would make sense for them to come down and take that, but don't forget it's the Euro rate today. There's every chance that we're just going to do that for the next 3 hours because we're waiting for the rate announcement. So what's the time? 8, 9, 10, 11, 12, 1. 5 hours we got until the rate announcement. So envisage 5 hourly candles doing something like that. It's probably what you're going to see today across the board. Great call on NQ. Yeah. Still going. I'm holding that. We need this DAX to drop. If this DAX drops, it'll drag all the US indices down with it. That's my target there. That propulsion gap is my target. 125. We will see. Thoughts on GJ? I've already done that. Someone else has asked for that. Well, I just did that, didn't I? Or did I? No, I didn't. I just did EJ, didn't I? Very similar, as you can see. But pound yen, we're looking to come back down into here. This is actually a double top, this pound yen one. So next week is the pound rate, next Thursday. So that's when we're going to get the interest rates for the pound. 4.25 we're on at the moment. Forecast is going to be somewhere in the region of 4.5 to 4.75. Our terminal rate has been called at 5. So it would make sense now for them to go in 0.25 increments. However, looking at our interest rates, our inflation, we are the highest inflation in the G7/8, whatever you want to call it now. And our inflation is coming down at one of the worst rates. So the UK bank has screwed this up royally. We should have been up here by now, like the others. Look what's happening with the others. Yeah, inflation's coming down beautifully. Unemployment is stable. Interest rates are exactly where they need to be. We are sitting here with the highest, not coming down anywhere near as fast as everybody else, and our unemployment is going up. So I'm totally screwed. The Bank of England has screwed it, basically. So I wouldn't be surprised if we saw 4.75 next week. So that is going to bolster the pound. So with all these pounds, anything that you are taking short on the pound, you look at it from a long-term perspective, most of the pounds you can see are rallying at the moment against most things, as we know. So it's a case of this should continue to go because they are anticipating higher interest rates coming through, especially if things like the US dollar and the CAD are hitting terminal rate and their rates now start to drop. The pound becomes a much more attractive place to put money, doesn't it? So it is going to get potentially stronger. We were forecasting a recession and we were forecasting higher interest rates a lot faster. So what's actually happened is the market has got much more interested in the pound because it looks like we're going to have to keep our interest rates higher for longer because we've screwed up inflation dropping. So actually, from a currency perspective, the pound is probably the most attractive thing out there at the moment. So be careful if you're shorting it. However, the economy's screwed. So it's not going to run away like a steam train, but it's more likely to continue to trend higher. So you want to be staying in line with 24.72, ideally. But if you look at it from the bias scorecard perspective, a lot of the pound is, it's short against the Swissy, the New Zealand, and the US. It's long against the CAD and the yen. But a lot of that is made up of retail. Yeah. So because retail is currently shorting these two, the bias scorecard is saying to long them. So if you take 2 off of that, that becomes a 3, which brings it range bound. That might take 1 off, comes back to 4. So these, although they are buys, they're kind of range bound buys. And you can see that in the market in the way that it's not running away like a lunatic. Yeah. If you look at it from a high perspective, we pushed up there. We made a new high, a new high, a new high, a new high, just about a new high, stagnated for weeks, just about a new high, stagnated, double topped. So you can see the rate of incline isn't fast. It's flattening out. And you can see that by the moving averages. And that's what you use moving averages for the angle of attack. Yeah, something's going like that, it's parabolic. Something's going like that, it's not. It's ever so slightly rangy bullish. So yeah, nothing particularly exciting there. Holding down at the lows at the moment on the DAX. Watch this area. Potential second leg. 7R outro. 7? You took the 5-minute, didn't you? Yes, you took this. You took the 5-minute ORB, didn't you? 5-minute pre-market ORB. If you can hold them, well, the only way I could possibly trade this, the one that you do, is if I basically put the EA on and then went away for half an hour, because I couldn't hold that. I just wouldn't be able to hold it. I'm just no good at holding that long. Not me. That's why I position trade. I can't hold on to stuff. That's my big problem. Morning, Andres. CAD yen, Henry. So CAD yen's getting down. So we've got an A-shaped recovery on the CAD yen. Straight back down. It's nowhere at the moment. It's a little bit more of a long than a short at the minute. Based on basically the propulsion gap situation. So we've just about got extended beyond the 25 level. So you can see there's one position on yesterday on that. It's pushed down again. We've filled that propulsion gap now. So putting in a nice potential W pattern there. Propulsion gap targets back up to the upside. So drop down your M15, M5, reversal alert. Your M15, you've already had one, which has just literally been invalidated by a pip or two. So that would be your next entry long. M5, you've already had one this morning. No, you haven't. You did have one this morning, but that's been invalidated as well. Look. So you're just about to get an entry there. That's a nice triple bottom. So yeah, looks good. Looks very good for longs at the moment. One on already from yesterday. So targets somewhere up in. You've got a lovely double resistance there in that propulsion gap. So that's what the market's been reacting off of. Potentially that. We need to see what happens with the US dollar, because obviously that will drag the CAD with it. And oil is still not happy. We have started to turn on oil, but not at anywhere that makes logical sense. So remember I said yesterday about these propulsion gaps? That would be the obvious spot to go long, because that is now completed all those propulsion gaps. However, it makes sense to come down and try and retest this level. So if this is bullish, and it's ever so slightly bullish, that high there is what we broke just. Then we came down and put a new low in. So if we're going to hold market structure on this, we are low, higher high, just. I mean, if you draw it in, it's literally marginal. Yeah, that's your higher high. This is going to be your higher low for a new leg up to put in a higher high. If that is what's going to happen, that is the scenario, and they are right to call it $95 a barrel, then that is it, isn't it? We're done. Propulsion. There's no need to go any further. That's it. That's your long. So there is your swing, and get out at some point in the next 2 or 3 weeks if you want to do that. But there's also the scenario of double bottoming or sweeping that low and then going back up again. But 65 a barrel, we didn't think was even on the cards. And it was. So this is what we were expecting, $70 a barrel. We were expecting to be the low. And we just smashed it. And then we came back up. And we were like, oh, look, they're cutting production. Brilliant. Gap up. Let's make oil more expensive. No. It's just not logical. This is not operating off supply and demand. The pricing of oil is not operating off supply and demand as you would expect it to. So I've no idea what it's going to do. I'm staying out of it now. I've had enough oil. I'm really tempted to take it as a long swing, but I'm not going to. Oh, hello. It's in the NASDAQ. Right. So let's have a look at ADRs. There aren't any. Let me just catch up on the chat. Outro. Morning, David. Morning, Michael. Curious. Have you ever tested the ORB on the France 40? No, I haven't. been watching it and it moves similar to the DAX. I don't even think I've got the France 40. I haven't got the France 40 there. I got it here. That's CAC 40, isn't it? Yeah, no, I've never looked at it. I don't know what the liquidity is like on it, but I'm looking at it over here. Yeah, it's an option. I've never tested it, so test it. I test it with the same set file as the DAX, obviously, and see what happens, because it's got the same open as the DAX, isn't it? So I would imagine it will work in the same way. How do you do aggressive drawdown control? Do you exit some positions or add new positions? Add new positions. Aggressive drawdown control is all covered in the bootcamp. Mr. Anderson. Good name. We've got Neo in here and Mr. Anderson. That's really good. I don't know if Neo's in here today, actually. He's normally in the afternoons, isn't he? So yeah, go to the bootcamp. And day 4 is how to position trade, trading risk and managing drawdown. That is drawdown control, and aggressive drawdown control is all covered in there. Yeah. That looks like it wants to break the lows. The US indices are coming down. We get that low broken, and that's going to help the DAX on its way as well. So my strategy is purely mechanical, so it makes it easier to hold them. Yeah, exactly. Makes it easier to hold them, but you seem to get a different RR every time. That's the difficulty. Is if you're using a trailing stop, it's not really a problem. But yeah, holding it, not pressing the exit button when you've got X% in front of you. That's the hard bit. CAD Swiss. We'll have a look at that in a sec. Oil. I've just looked at. Hello, my name is Steve. It's been 3 days since I last traded oil. The urge is still there every day, but I know it's a downward spiral. Just say no. Yeah, I agree. CAD Swiss basically is a long. I've got one on at the moment. Yeah, back up into that propulsion, looking for a V-shaped recovery up into there. Extended on the hourly. So your entry was, you could have had one, well, there was an entry yesterday. There was also an entry this morning down there. Or M5 down there. Your entry. So yeah, long. Is it more about politics, not sense with oil? Seems to be. Oil's just, like I said yesterday, oil doesn't seem to pay any attention at the moment. I don't know if it ever has. I mean, I've only been trading oil. I mean, I started trading it last year, back end of last year. It's not something I've ever got involved in, never looked at it. Started trading it because I was trading it on the futures market, and I was actually doing quite well in the futures market with it. So I started looking at it from a position trading perspective, but it doesn't follow logic or fundamentals in the same way as everything else does. So you would expect, and like I said yesterday, when you get a barrel count, oil news is released every Wednesday. If the expected barrels are 100 million, right, and we have a negative 50 million result, you would expect, because there's less than expected, that the price of oil will rise because supply has been cut, or supply is less available, demand is the same, therefore prices go up. That's how markets work. Yeah? If you've got something that somebody wants and nobody else has got it, you can charge what you want. Prices go up. That's how supply and demand works. That's why markets exist. But it doesn't do that. You'll have that figure come out and it will collapse. Makes no sense. You have them saying that they're going to cut production, which jumps the price up. And you're like, well, if it's got that gap size there, we haven't had that in oil. We looked back on the charts when that gap appeared. Years. Never had a gap that big ever. So you'd be thinking, right, this is a big one. No. Not only did it fill the gap, which is what we called short, which is what we played short, which is great, made some money on that, it was lovely. But then it collapsed all the way down here. So if it was really the case that this should be bullish based on supply cuts, what are we doing all the way back down here? It doesn't make sense. It's just not logical. So I can't trade something that's not logical. If I can't understand why it's moving and who's moving it, I'm not interested. Which is why I don't do crypto. Yeah, it's some phantom invented crypto. Everybody jumped on board wanting to try and make millions out of it. Everybody's losing money on it. Nobody admits it, but nobody's making money in crypto. And it's because they don't understand it. It's being manipulated by someone or something that nobody knows. So how can you possibly trade it? There's nothing to say. You can't guess in any way, shape or form what direction anything's going to go in, because at any point somebody can manipulate it. I mean, look at it. It's just an utter mess. It's a short. Look at that for a beautiful short. Yeah, it's coming all the way back down here because no one in commerce has adopted it. Therefore, it can't survive, because if the world that actually transacts, the real world where you buy stuff like cars and houses and all these big ticket purchases, if they're not accepting this, it's dead. Simple as that. And obviously Europeans are starting to regulate it now. So the whole purpose of it is it's an unregulated hidey thing. Well, it's not anymore because we're regulating it. So it's just another currency. So what's the point in using it? I might as well just use the currency the rest of my country uses. Dead. But people still insist on, like that bloke I said about. He made apparently $1 million trading crypto, and then he lost 800,000 of it. He borrowed 200 grand to buy some more, to buy the dip down here. He's about to go bankrupt. I don't understand. He's obviously selling a course that teaches you how to trade crypto. But anyway, enough about crypto. It is better than with Forex today. Makes more sense. Yeah. Morning, Guna. Oh, I completely forgot. Happy Star Wars Day, everybody. May the 4th be with you. Completely forgot. I was going to put my Jedi robe and everything on. Because I got back from the gym late, I completely forgot. I've got a nice Jedi robe. I haven't got a lightsaber, but I've got a Jedi robe. It's actually a dressing gown. But anyway. Crypto is a scam, yeah. Is it a video on YouTube? Crypto with cracked it. Yeah, get crypto. Anyway, let's talk about stuff that moves that we can understand. So there's no ADRs today. Weeklies, we've got loads of them. We're on Thursday. So we've covered all of these pretty much this week, and a lot of these have already played out. But I'll run through them quickly. So oil, obviously, we know about. Oil, let's draw a line on Monday. That one. There's Monday. So, see that, can you? So oil, that is 125 of its weekly range. We've got a lovely little gap down and bounce happening this morning. Huge propulsion gap targets to the upside. I have no idea if it's going up or down, but you'd be buying it here. So yeah, looks like a good long. It's already taken off though. So you've had your reverse alert this morning. Although it's not actually far away from, I mean, it's such a tempting little long. I'm not going to, but it is such a tempting little long. So that's a good opportunity for a long. Aussie dollar CAD has already played. No, sorry, that hasn't. That's one of the ones that has not played out of the Aussies. So there's your extension. It's one of the ones that we thought was coming down and it didn't. So it started to come down towards the gap fill. It found a weird invisible support and just bounced back up into this range again. So obviously this is to do with the Canadian dollar and the US dollar, but very, very weird Aussie CAD. So that is still an opportunity short on some CAD strength, but we need to see if we're going to get that US dollar strength today. And obviously tomorrow we've got the CAD news. So we'll see what happens with the unemployment rate on the CAD. If the unemployment rate on the CAD drops, that Canadian dollar is going to pump. If that Canadian dollar pumps, obviously this is coming back down to fill this gap in. So there is potential still for this to move back down tomorrow. So that is still an opportunity short. Aussie dollar Swiss, that one's already played out. So that was your weekly hit. That was your A-shaped recovery and some. It's actually done its weekly range in the opposite direction now, and it's bouncing back. So this has been like a kangaroo this week. Aussie dollar yen. Again, there's your Monday. So we flew up A-shaped recovery on the Aussie dollar move and the yen move. So that's come down very, very nicely. That's already played out. That was 125. Aussie New Zealand. That one's already played out as well. So there was your hit, 100 ADR, AWR rather, and back down. So all of these are profitable. All these are banked already. CAD Swiss. So that is hit to the downside. So that's a good entry still. CAD Swiss this morning. There's your Monday. Came down, bouncing. Got one long on that already. Looking to come back up into that propulsion gap. And obviously then do whatever it wants to from there. CAD yen, that's extended to the downside. So that's a nice looking bounce. Look at that beautiful bounce there. So that's that weekly high, weekly low. Accumulated off of it, came back down, tapped into it, bounced straight back off. Back up into there. That's a good looking long. CAD yen, already got one on that. Euros, right? So Euro odd and Euro CAD, you need to be careful with because obviously today is the day. Oh, that's already played out anyway. So Aussie, that was your long there. You can see I took the long there and out, and it absolutely flew. So just did the propulsion gap, V-shaped recovery, and the Euro CAD. So the Euro CAD is a hit to the upside. So this is a short opportunity. I would probably want to take it once we get up to that monthly high. However, that's the propulsion gap and that target down there. So there's two very, very nice targets to the downside on this. Again, this is a very, very, very tricky one to trade at the moment because we've got the news on the euro today and the news on the Canadian dollar tomorrow and the US dollar tomorrow. So this has got double news tomorrow, US and CAD. This has got massive news today with the release and the press conference. So yeah, big potential move on this one in either direction. So where you are at the moment, obviously, it is extended on the weekly from here. That is 100% of its weekly range already done by Thursday. So you would expect it to come down. However, if that euro rate goes up today, this is going through the roof. So be careful if you're mean reverting that one. Pound odd, that's already done. So that was your weekly hit and reversed. That was 125. Pound New Zealand's done the same thing. So that's already played out. So there's the entry on that one there. Now, that was that trade there. New Zealand dollar CAD. That's extended to the upside. So this one is still valid for a short. Back down into this double top. Beautiful target. So already on one, looking for it to come back down into there. This is 100% of its weekly range hit. And yeah. And obviously we've got news on this tomorrow. So if we get good news on the Canadian dollar unemployment, this is coming down. New Zealand dollar, Swiss. No, not Swiss. Yen, sorry. New Zealand dollar, yen. Where's that? 198. The upside. So there's your hit from there down to there. Push back up into propulsion. Not the best in the world. So that's more of a rangy play, that one. So it's kind of up. We've got propulsion gap targets to the downside as well. So that looks more, well, it's very difficult to call that at the minute. More of a long at the moment, but it's also a good short. Very difficult to trade that in either direction at the minute. And US dollar yen. So US dollar yen obviously pushed up. So this is a lovely looking long opportunity. That's filled to the pit, basically. Straight off of resistance, off of support, looking for a push up, back up into there. So US dollar yen, potentially we've got decent movement to the upside on a continuation of this move here. So this is a pullback potentially on this sort of movement. Now we had all this massive weakness in the yen, which caused this big spike up. But all it's done is run up into the monthly level and they've sold it back off again. So for me, this is exactly where you want to be buying the US dollar. Looking at it basically running up and breaking that high. But we don't know what the market's going to make of the interest rate rise and potential freeze coming up. So it's quite hard to gauge whether we should be longing or shorting US. Yen at the moment is very, very hot and cold. We've got chances of them increasing their interest rates. And then they came out and said, actually, yes, we will do, but probably not for a year and a half. Thanks for the confusion. So again, these two together, really, you've got no idea which way either of these is going at the moment. So in theory, I think you can probably trade this in both directions. If you look at all the yen pairs, they are more bullish than bearish. So we should be buying everything against the yen at the moment from a fundamental stance. The US dollar yen has now gone much more range bound. COT is still very much long on it. Retail's long as well at the moment, so it's a little bit of a short. But there's no real bias in either direction on these. But the problem with the yen is obviously when they step in and they dump it. So they basically pump the yen really hard and everything dumps against it. So it's a very, very tricky one to trade at the minute. You're stuck in the middle of the previous monthly range right now. So you've got propulsion gap targets to the upside. You've got propulsion gap targets to the downside. Could go either way. At the moment, it's extended, just about extended to the downside. So you'd be looking more for longs. And I quite like the idea of this basically powering up. So just because of the weakness that we had with the yen. So this huge Friday where we had 300 ADR move, something was very wrong with the yen. They piled out of that at a rate of knots. So I suspect this is a pullback and we're going to get another leg because that was such a big move. Very, very similar to this. Look. Yeah, we had a bit of a weird thing going on, but then we put that second leg in. So all of these came off the previous monthly highs. So difficult to tell. But yeah, I like all of them long. So, but there's all of your weeklies. RSIs virtually flat now on all the ones we looked at for earlier on in the week. They've all played out. They've all been banked. So there's still a few to look at there. And we'll go through those in a sec. Let's just have a quick look at the DAX. So the DAX has just pulled back up into propulsion. There's that level. So nice pause candle there. Potential drop. So yeah, potential second leg down. See if we get a bearish candle forming here. That might be a good short. Just catch up on the chat. Are you still 2:30 session? Yep. 2:20 in the afternoon is for the New York session. Looks like the yen is weakening. Yeah. Yeah, all starting to push up now, all these yens. They have still got, this is the trouble with them. We know gaps get filled. We know the propulsion gaps get filled. So still got downside. We may get the same as the Aussie where we get that full A-shaped recovery before we go. We may also, dog woke me up at 4 o'clock this morning, sneezing. She had a sneezing fit at 4 in the morning. And I couldn't get back to sleep properly after that. So, and I've just done a 15-mile bike ride. So a little bit tired this morning. So yeah, we know these gaps get filled. The Aussies obviously all did the A-shaped recovery. There is a chance that that's going to happen with these as well, but there's also a chance that these are going to get orphaned. If this is real proper weakness in the yen, and this is just the profit take move before the second leg, we will get orphaned propulsion gaps. So it's difficult to tell whether or not that is going to get filled or not. But I'd still like it. If you took it here, you know where you're taking your second. It's a very simple trade, isn't it? There's a potential 3-bar reversal going in. We've got 3 minutes left on this candle. It's looking bearish. Wonder if we can get a long on the DAX too. Yeah, you certainly had it if you took it. Is it more opportunity on the pound yen? Covered the pound yen already. Gonna do one of those. Don't know which. If it got down there, that would be a beautiful long. I'd much rather long it from there. Yeah, than here. But it could come up to there and then come down to there. Or it could go down to there and then go up to there. Take your pick. This is the beauty of position trading. Doesn't matter if you're wrong or right, does it? So if you get in long and it goes up, well done. If you get in short because you're thinking it's going to go down to there and it goes up, never mind. Take another short up there and get out when it does come down to there. If you get in long here and it doesn't go up to there and it comes down to here, get in long again and then get out when it goes up to there. You can't lose. What position trading is all about. We eliminate the losses. Then you win. Opportunity on the DAX, 158. Yeah, it could be. Don't know. If we're going to put in a new leg down somewhere in this area is where we are going to start selling. Certainly looks like it wants to go from there, doesn't it? If you look at the DAX on the hourly, it's really, really, really ugly. So this is the sixth attempt. Failed again. Look at the propulsion gaps on this. I mean, this is just beautiful, isn't it? Look, every single propulsion gap that's been painted is filled. Yeah, it's a range trader's dream, this one. So that was your long. Back up into there. So 159 is where you want to be shorting it, if it gets there. But, you know, this could be just a pullback second leg. This is the lowest we've got. This is the lowest we've managed to get. Don't forget, the euro rates are coming out. Yeah, so everybody that has been longing it from anywhere along here is probably just been liquidated. So all the longs are out. So we're left with people who are short only, right? So if the people that are short only are going to add into their positions, they're going to do it when we get back up to these highs, or they're just going to drive it back down there. Euro comes out with 4. Euro flies. This collapses. Everybody that's long's been liquidated. Just makes sense to it makes sense for this to be the breakout. It really does. Logical. But, you know, this is the market. It's not necessarily logical, is it? It's got to get down here and do this gap. So today is the day. If you're going to do something like that, you're going to do it when there's a European rate announcement coming out. That is different to expected rates. We'll see. We will see. One of those two is going to play out. But I'm not playing it. Right. RSIs. So hourlies, we've got US dollar Swiss. We had it, already in it, already playing out. So that is US dollar strength this morning, isn't it? Yeah. A little bit of US dollar strength. Weakness on the Swiss franc. So long one from this morning. That's a RSI extension on the hourly. Drop down. M5 reverse alert this morning was there. There we go. That's my entry. half an ADR target. So somewhere in the region of 34. So it missed me by 1 pip. There you go. So that's pretty much the target already. US dollar yen. That is extended on the hourly to the downside as well. So that's the propulsion gap target that we looked at being filled. There's your entry long back up into here. So that's nicely extended. That's below the 75. Already got one on that. Didn't quite get the second on it. So close. 67. 68 is half an ADR. I need 3/4 of an ADR to get in. So not quite on that one. But could have taken a second entry there. US dollar Swiss is extended on the 4 hour as well. So obviously you can see this is a big old downtrend at the moment. 4 hour RSI extension. So just looking for that pullback, basically. Or a V-shaped recovery there. But now that's the question. Are we going to get that continued? If the market isn't going to be particularly happy about the rates and what was said yesterday, this could start to accelerate down. US dollar Swiss has many times been my nemesis, because what you tend to find is when money comes out of the US dollar, because of any fundamental shift or weakness in the US dollar, they tend to put it into the safe havens. So it tends to flow into the JPY or the Swiss franc. So what you get is money coming out of this and into that, causing this to go parabolic. So this can become a very squeezy pair at times, the US dollar Swiss. So you need to be a little careful. Can you give John Wick wallpaper on Telegram? I haven't got any John Wick wallpaper. I've got the AI generated art. It's not really wallpaper. They're not really wallpaper. It's weird. It's put a little corner in that. Look. Like that. I can put them in there, yeah. I can dump them all in there. There we go. They're all in Telegram. Right, US dollar Swiss. Yeah, so that's a nice 4 hour RSI extension as well. Pound CAD. Again, massive extension, 4 hour. In this one already, this is my nemesis at the moment. That aggressive drawdown control positions in profit, which is nice. I need to put a TP on that manually down there. So yeah, ADR on this. So what I would love to happen today is the euro actually to weaken a little bit, which will usually bring the pound down a little bit with it as well. But any kind of strength in the US dollar today, and hopefully with the CAD as well. German services PMIs are bullish. $54.2 off of 53.9 forecast. 56 off of 55.7, ever so slight. So it's a little bit bullish euro. Yeah, this one looking for some kind of respite on this. So got out of loads of this here. So that was the initial entry. Second, third, fourth, fifth. That was an aggressive drawdown control position, which worked beautifully. So closed that out and then closed out that one and that one. So that's closed, that's closed, that's closed. That was aggressive. I decided to leave this one here on and this one here on, and took us another position. And then obviously we've had another rally day yesterday. So scaled into another one and taken another aggressive. At that point there, I had the opportunity to get out with $800 in profit. 0.8%. I decided not to take it. Silly me. So yeah, going into another leg basically by the looks of things, but this is really, really extended on the 4-hour look. So this is your initial squeeze and that was your flag break. So there is potential for this to move up more as well, but we are nicely extended. So hopefully what we're going to do is put in a nice orderly market structure from here. So push, profit take, push, profit take. I don't mind if they do that, but as long as they give us the profit take moves, that's my exit. So looking for it to pull back down, just down into there, and I'll exit the rest of that position. So it'd be nice and profitable. Just, it's a little bit of a squeezy one. 14th of April, roughly, got into that. So not too long, but fast, that one. So nicely extended, so good looking shorts. You obviously would have had your entry this morning up here. If in Asia, if you're awake, the EA would have taken that for you up there. But I got into one yesterday there, so that's too close to take another one. So didn't take that one, but that would have been your first entry if you were going to get into a first entry on this one. Euro Swiss is extended on the 4-hour as well. That's a beautiful double bottom on that weekly, monthly area there. So that nice support. Pushing up into there. Again, today, wouldn't expect too much off of this until the announcement for the rates. So looking for a bullish move, but we need to see what happens with the rates. If we get 3.75 and we don't get 4, which is potential, it's a 50-50 shot, I reckon, today. There is possibility we might see some weakness in the euro because I think the market has started to factor in a little bit more strength on that. If you look at the euro pairs, we had this big old rally into the euro, and I think that is the market thinking 4% instead of 3.75. So if we don't get that, they may need to undo some of the positions that they've entered into, which means we might get some weakness come through in the euro, but then Lagarde will talk it up half an hour later. So there is potential today for a big, fast drop in the euro on the announcement, and then for Lagarde to rally it back up again. So we could get some quite big whipsawing today, but we'll see. You never tell what's going to happen with it. So just be careful, Euro Swiss and Euro CAD, both of them extended in opposite directions. So Euro CAD is a short, Euro Swiss is a long. So difficult. You're going to get hedged on that if you take both of them. So maybe leave both of them. CAD Swiss extended to the downside. Got one on that already. So nice RSI extension down here. Looking to pay back up into that propulsion. Beautiful bounces off the 24 area, 24.72 bounces on the way down. Looks good for a long at the moment, just a pullback at the minute though, back up into there and then potentially carrying back on the down leg. Reverse alert on that one was very nice and tight this morning. M5 pretty much the same. So that's played out very nicely. Propulsion gaps all filled here. Got more up there to sort out. Hourlies, you're looking at coming at least back up into there, but this, well, sorry, no, at least back up into there. So if market structure is going to hold long, high, low, lower, high, lower, low, lower, high, lower, low, or jump up a time frame, maybe even, yeah, still the same really, isn't it? There is a potential for this to be a sort of peak formation low pullback. Just looking, we haven't pulled back up into the 24.72 for a while. So it might want to come up a bit deeper and try and do a double top. And then maybe go into a bit of a range there, but we'll see. Either way, it's a nice looking long at the moment. There you go. That's all that lot. Done. $1 Swiss. It's not going to give me my TP, is it? I'm so close. Literally there. I'm going to let it run there. I'm not going to intervene. Tony, German PMI in a minute. French and Spanish were red, so might give it a nudge down. DAX just pulled all the way back up. So we've got that 3-bar. This wasn't particularly great 3-bar reversal, but it was a push, pause, pull, ever so slight pull, ever so slight. Then we had an outside bar. Then we've had a bull bar. Now we've got an inside bar. Not really going anywhere, is it, at the minute? 3 minutes left on this candle. But that propulsion gap, potentially, we got so much more up to the upside as well. But this is what I mean. Today, it's the same as yesterday. You've got the euro rates coming out. I'd be very surprised if the DAX made a run for it. It's due it, but this isn't the time to do the run, is it? The time to do the run is when the euro rate comes out. So I'm not particularly surprised by this bounce. It looks very hopeful down there, didn't it? But same as before. Push back up into there. I mean, we're not going to get up there without news. 125 ADR to the upside today is not going to happen without the news event. So there is potential for, as I said, if we get 3.75, the euro could well drop because the market's factored in 4, in which case then the DAX is going to pump up to there. If Lagarde then turns around and rallies the market, we're going to fill that propulsion gap and then come back down to fill this. But that would still leave us within this range that we just don't seem to be able to get out of. But the problem with ranges as well is the one that you take, because you've seen that range form, is usually the one that breaks. So that's the problem with trend trading. It's the problem with all trading. By the time you've identified a pattern, the pattern's played out. So you're late to the market. When you see something trending, you go, oh, look, it's trending. I'll get in on the next pullback. Invariably, that's the one that turns into an M pattern reversal. Or you just take everything you can because you don't know which way it's going or what it's going to do. Euro yen, Adrian. So euro yen, we've still got a little bit more downside to do. With this one, we've got loads of orphan propulsion gaps all the way down here. Look, lots and lots and lots of downside potential on it. However, we've had that massive weak euro. So we pushed up, pulled back, pushed up, went into an accumulation for a good few weeks. That's when they undid the yen. And obviously everything rallied 300% against the yen. Since then, we are just coming back down into that support there and this propulsion gap. So that's the targets I would be looking for. So some kind of bounce out of there. It's not extended enough for me to want to get into it yet. But it is fairly decent opportunity when we get down into there. But obviously, if the euro is going to pop off of the interest rates, it's highly likely it's going to scream either through that or through all this lot and come back up and double top. So if you wanted to scalp on this today, the scalp plays that I would look at on this today would be either coming down into 150 to 175 ADR ranges in both directions. Would be good for a scalp short or a scalp long with about half an ADR. And assume that we're going to get some kind of whipsaw until Lagarde speaks. But it really does depend what happens with that rate. And don't forget, all your Swiss franc pairs are going to go mental as well. So whatever exposure you've got on the Swiss franc and the euro, I've got no euro exposure on this account at all at the moment, but any Swiss franc exposure and any euro exposure you've got, just that is all going to go nuts. Michael, Euro New Zealand, you went long yesterday. Didn't get out. The long entry for me was there, but if you took a long on this yesterday, you've had 3/4 of an ADR of movement. But if you're not out of it, it's up here. But all these propulsion targets are valid until they're not valid anymore. Yeah. So right now, anticipation is interest rate increase or interest rate increase above forecast. All of that is fundamentally bullish euro. So it's not really a problem. However, if it doesn't come as expected and Lagarde doesn't come out bullish in the speech, we could tank. And these will get orphaned. So they're only good targets when you've got the fundamentals, when you haven't got any fundamentals that could interfere with them being targets. The market will always try and fill the propulsion gaps. But if there is a fundamental shift, let's say, for example, they decide to go to 4.5. This thing's coming down like a free falling person without a parachute, right? It's never going to get back here. So you're going to have to just manage it. We've still got that propulsion gap target there. So, you know, this is why these are so useful. Because we know the market fills them all the time. Yeah, that's what it does. It comes and fills the propulsion gaps virtually all the time. You know, it's 90% of the time these are get filled. When they don't get filled, i.e. it moves away in an extremely fast manner, it creates another one. So all you do is you scale in and wait for them to come back to that one. So you replace your initial target. Let's say, for example, you got in here and you were looking for it to go there. If it pushes down to here, move your target from here down to here. Use that one. If it continues to push down, it will make another propulsion gap here, for example. You move your target down from there to there. And as long as you're scaling into your positions, your average is moving down. As long as your average is below a decent sized propulsion gap, there's a very, very high probability of that being hit. It's just you've got to survive long enough for it to do that move. We don't know when that's going to happen, obviously, because we can't do the timing. So everybody that got that there and they went, oh, that's a lovely short, back down into that propulsion gap fill, it went like that. So they went, oh, we better get in again. It didn't come back down into that one, that one, that one, or that one. So it went sideways and then it pushed up again. So they had to take another position. So you're in 1, 2, 3 positions. And now your average is going to be sitting somewhere around here. That is your propulsion gap target because it's below your average and it's the closest propulsion gap target to the average. However, it came back down and did all of it because that's what it normally does. But this is the where do you get out? You get out in profit. How greedy are you? That one, that one, that one, or that one. So I'm not greedy. I'm a bit more greedy. I'm a little bit more greedy. I'm really greedy. So if you could hold for another 3 days, well done. You were super greedy. If you couldn't hold for 3 days, you weren't greedy. Either way, you all got out in profit. So, you know, right now, if you're in this long and you're sitting in ever such a slight bit of drawdown, if it pushes up to there, that gets you out in profit. So put your target there and hope that they hit that. But there's a high probability they might hit that if the euro rallies, isn't it? So if I was you sitting in this now, I would have my target there at 125 ADR. If I'm worried about it, I would get out here. But I would be more inclined to say that's going to happen. But if that happens, I'll deal with it. I've got no euro on because there's not been any euro opportunities that haven't played out. That one was done. H1M5 hasn't got any. Let's see if there's any on the other, on H4 or ADRs. So ADRs, yeah, ADR is hedged on the euro. So ADR is going to win. Either that euro yen or that euro CAD is going to hit TP today. One of them is going to hit. That's the beauty of being hedged. I'm really liking this. Doesn't matter, does it? Goes up, goes down, don't care. One of them will win. The other one I'll deal with, or the EA will deal with. H4 has euro long in the form of euro Swiss. Euro Swiss is the slowest mover because obviously the euro pumps, the Swiss pumps with it, and the euro drops, the Swiss drops with it. So when you get a pump on the euro Swiss, for example, this will be the one that moves the least distance because they're both pushing hard together The euro will beat the Swissy because it's euro news, but that's pretty safe. So no real exposure on the euro at the minute. I hold for 1 ADR, Michael. Yeah, that's fine. Nothing wrong with that. Yeah, just you didn't get 1 ADR, so you just wait for 1 ADR. You'll just be in trades longer than I will. There's absolutely nothing wrong with it. Targeting half an ADR, 3/4 an ADR, 1 ADR, targeting propulsion gaps, forget about ADR. There's no right or wrong. You just get in, get out when you're comfortable. There you go. Let's close that US dollar Swiss out. Did hit my target. Thank you very much. Just gave it to me and then pull back again. DAX is starting to come back down again. I wouldn't expect much more than that today before the news. Tim, how should interest rates affect the euro Swiss? Presumably euro will move stronger than the Swiss. Yeah, I've just answered that. Yeah. So this is what the bias scorecard is for. Yeah. So today we've got euro news. So if you type euro in, it will give you the strongest and weakest fundamentals and sentiment plays, right? So if you want to trade the euro long today, euro CAD is your best bet because the Canadian dollar is very weak at the moment. The fundamentals on the Canadian dollar are worse than the euro. The futures market is long euro and short Canadian dollar, and retail at the moment are all shorting the euro CAD. So you want to be doing the opposite to retail, longing it. So basically, this is the one you want to be buying at the moment, euro CAD. So if you think that the euro rates are going to increase today and we're going to get a pump, euro CAD is going to be the one that's going to move the furthest, probably, followed by the euro yen. If you want to short it, you want to be shorting the euro against the US dollar or any of the rest of them, really. But the euro Swiss is the one that is going to move the least because the euro and the Swiss are in the same area. They are very, very, very close trade partners in the services sector. And they move together. So when there's a pump on one, there's a pump on the other. So when you've got something that's moving strong and something that's moving strong, you get a range. When you've got something that's moving strong and something that's moving weak, you get a push or a pull. So that's the one, the euro Swiss, which is the one that usually gets the least movement. However, at the moment, because obviously we've got this banking problem, if the euro rates come out and then all of a sudden a bank announces it's going to go pop, the Swiss franc's going to power up way more than the euro is because they're going to pull all the money out of the country's currency for that bank, US dollar probably in this case because it's a Beverly Hills bank, and they're going to pile it on in the US dollar and the yen, in the Swiss franc and the yen. So the Swissy will power up, and that might make the euro Swiss come down, even though the euro is pumping. That's what your currency strength meters are useful for. I don't trade with these because they're after, you can tell what's happened. Yeah. So you can look at this and say, oh, right, well, the yen has been very, very strong and the Australian dollar has been very, very weak. We can tell that because if you look at the Aussie dollar yen, you will see it's come down because the Australian dollar has been weak and the yen has been strong. So I don't need a chart to show me that because price action tells me that. I can see it on the chart. Pointless currency strength. But fundamental strength is different because it's a case of if something happens, which will move the most, not what has moved the most. This is more forward-looking than backward-looking. But obviously it lags as well. Hot data's old, isn't it? So DAX is stuck. Not going anywhere. Look. Right. Right, that's it. That's all I've got for you today. So we've covered all the RSIs. RSIs are now flat on the hourly. ADRs, you're not going to get any until the news. So 115 rather, is your euro rate. So that's when it's all going to go a little bit crazy. we've got unemployment claims squeezed in between the euro rate and the press conference. So we've got mental moves potentially on the euro. Might not do anything. We'll see. We've then got US dollar news, and then we've got potential mental moves off of the ECB press conference. So as soon as the press conference finishes, that is when we tend to get the movements. Look at FOMC last night on like the NASDAQ, yeah? So if you look at the actual movement, right, that is FOMC. Whipsaw. Then we have after FOMC. Then we have the press conference, bigger whipsaw. Yeah, the press conference is more important. And then we have the end of the press conference. Yeah. Then we have the movement. Yeah. So this is when you take your trades or when the market moves. When the press conference finishes, they have all the information, the analysts, for, okay, forward guidance is this. What do we need to do now with this currency? We need to buy it or we need to sell it. Pass that on to the trading desks. The trading desks then execute the orders. So the moves happen not on the interest rate. The moves happen on the press conference completion. That's when you get your moves. So what you can do is if you drop down to a 5-minute chart, for example, you can basically go, right, as soon as that press conference finishes, whichever way it goes next, I'm in. And just take that next one or wait for that candle to close afterwards and then go in that direction. This is what I did with the NASDAQ yesterday, basically. Just wait for all the nuttiness to be over. And this is what everybody tries to trade. When they're news trading, everybody tries to trade this. Very difficult. Sometimes it's absolutely fantastic and it will just go and it won't stop. Other times, and most of the time, you're going to get this whipsaw and they're just clearing the decks basically so that they've got everybody's money and then they go and move it whichever way they want. So this is the accumulation phase. They accumulate everybody's orders. They look at their book and go, right, what's the net balance? Long or short? Short. Okay, drive it down. That's how they make the money. And then they get out their positions. That's, again, what's explained in day one of the bootcamp, isn't it? Accumulation, distribution, of money. That's what they do. They just build a book, decide whether or not it's more beneficial to take the market long or short, which makes them more money. That's what they do. When they've got enough money, they drop it, reverse the orders, and bank a load of cash, which is what we do. We just wait for them to do that. So when they push, we know they have next move is going to be to pull, because if they don't pull, they can't make money. So all we do is we wait for them to get there, and then we get on the pull with them. Simples most of the time. That aggressive drawdown control position is not going anywhere. Not that I was expecting it to until the euro. So flip-flop around and wait. Right, I'll be back this afternoon at 2:20. We'll have a look at what happens. Oh, sorry, John. I've put that in yours. Sorry, for those of you that I've just realised, I was talking to some guy, John, in Telegram, and I've just put all the John Wicks into his chat, not into the main group. Let me just put those in the main group. Here they go. They're in the main group now. Right, so in the Telegram group, if you're in there going, where's all the John Wicks? They're now in the Telegram group. Okay. Whoops. Bombarded. He's just said, nice, I wanted a copy of those. They're great. He's got no idea. If he's not in here, John, if you're not in here, no idea why I've just dumped all those John Wicks in your Telegram chat. Anyway. Right, so back at 2:20 this afternoon for the New York session. And then, yeah, back tomorrow morning, 7:50, as usual for Frankfurt. We'll unpick the euro rate, see what's happened with the unemployment for the US, and then get ready for the rest of the day, basically, and see if we can make some money off of the NASDAQ or the Dow. All right, so have a good one. Anything you need, I'll be in the Telegram group. Otherwise, I will see you guys either this afternoon or tomorrow morning. Have a good day.